Welcome, ladies.
Hello.
Hello, everyone.
Hi. So I'd like to start by having each of you introduce yourself and your credit union and also how long you've been live with your BNPL solution. So we'll why don't we just go ahead and go in alphabetical order? So Ashley, let's start with you.
Hi, I'm Ashley Medall. I'm the Chief Lending Officer at Educators Credit Union in Wisconsin, and we have been live for 1 year. We went live August of last year.
Imelda.
Hello, everyone. I'm Imelda Baca. I am in Arizona Financial Credit Union. We are 3.4 billion in assets, and we have been live since March, so about 5.5 months.
And hello, I'm Indira Khan. I'm the Chief Transformation Officer here at Suffolk Credit Union, and we've been with Bryce since infancy. So we were one of the first credit unions to go live with Buy Now, Pay Later, and the first credit union in New York to go live with Buy Now, Pay Later financial institution. So love to share my knowledge here today with you guys.
Love it. Thank you so much. And Indira, you make a great point. I mean, everyone on this panel is at a different stage in offering BNPL to their members. So the one thing that we do all have in common, though, is that we started offering it to our members for a reason, right? So I'd love to hear from you directly. When you started thinking about Buy Now, Pay Later, what kind of tipped you over the edge in terms of offering this to your members? And Ashley, we can start with you.
Thank you. Well, it started when we took a deeper dive into the types of the transactions and withdrawals that our members were having. We actually found that over 46,000 of our members were using traditional buy now, pay later products. This was far more than I anticipated, but it showed me that this is something our members really want and need. We also saw a trend where these members would kind of find themselves overdrawn. They lost track of the number of offers they had from every different channel. So like others, we're very member centric. We want to be full service, one-stop shop, and we want to be able to offer them that service in-house.
Wow, 46,000 members. Just to give the audience a little context, how many members does Educators have today?
150,000. So it was a decent amount.
That's a healthy chunk. Imelda, what about you? Actually, we've done a webinar together, Imelda, and you kind of talked about this story. I'd love for you to walk through it for the new audience here today.
Yeah, definitely. So we actually started tracking BNPL usage back in 2021, so quite some time ago. We really just wanted, we were following kind of the trend of the new way to pay, and we wanted to really understand if our members were using it. So in 2021, we started tracking it, and we found just in that year that our members were paying third-party buy now pay later solutions like $1 million of every month from their checking accounts. And we started to notice that it started to increase year over year by 16%. So from there, we realized like our members are using this solution, and we want to be that lender that they choose when they're using these solutions. We want to be there for them at that point of purchase. So we decided to then start tracking it, and we realized that this is something where our members are using it. We want to be where they're at in their purchases. So we started to look at Equipify, and eventually, here we are. In 2025, now we've launched the solution. It's been great. Our members love it. And really, it was for us. It was about similar to Ashley. Was really about just being there every time they use their checking account. We want to be the ones they choose. We want to be where they're at and how they're buying nowadays and how they're using their payment solutions. And we wanted to be relevant and competitive in that market with our members. So we definitely have seen success thus far.
Oh, that's great. I mean, if they're going to use Buy Now, Pay Later anyway, why not have it be from you?
Exactly.
That's awesome. Indira, what about you? I actually don't know that I've ever heard your story, so I'd love to hear it, and I'm sure the audience would as well.
Yeah, so I echoed what Imelda is saying, right? It's about relevancy. And when I joined the credit union, it was about 5 years ago. And then in 2021, I met Bryce at GAC. And our CEO is very driven. She is very fintech. She wants to make sure that what we are offering to our members are very holistic, not just one product, but looking at the whole platform of fintech solutions out there and how do we remain relevant, right? I think that's the word. And it was simple, right? You look at it, and every time you're decisioning on a loan, if you're looking at loan applications or you're a part of that committee, what are you seeing on those credit reports? Affirm, Klarna, Klarna. And quickly you realize that your members were using somebody else and you were not becoming as sticky as you used to be. And in order for credit unions to remain relevant and to be able to engage with their members, they're going to have to pivot to these types of solutions that their members are already participating in. And it was an easy decision. And also, like it's like leasing. Leasing is a very big part of automotive lending right now. And if you're not in that space, somebody else is getting that business. So it became one of those things that we were very focused on to getting started with it. And we built it out from the very foundational place of where Equipify started. And what I can tell you is I'm glad that they were the partner that we were fortunate enough to be working with. They're not just a vendor, they're a true partner, and they have worked with us every step of the way, even when we had technological deficiencies that couldn't quite, give us the results that we wanted. But we were patient and they were patient and they worked with us. But we got there, and we went from doing $50,000 a month in small microloans to last month, because we did our upgrade, our system upgrade, to doing $150,000 in loans. And the delinquencies have been practically non-existent because of the parameters, right? You're able to set up your own parameters and you work with them, constantly engaging to say, what can I do better? How can we make it better? But overall, anyone, and I've had so many referrals from Equipify of people wanting to talk to me about the product. And it's the one partnership right now that I would stop if somebody called me and said, hey, do you want to tell me how it's working? I actually have 2 calls scheduled to talk to people about it. That it's my pleasure to talk about it, because credit unions are, sometimes the partnership is not quite a two-way street. But I would say it comes down to the relevancy, having a partner that works with you to get you the results that you want has been second to none. So.
Oh my gosh. Well, you heard it here, folks. And we're great to work with. Really, really appreciate that valued testimonial, and we certainly appreciate all of the reference calls that you've assisted with. And if anyone wants to reach out to you, I'm sure you'd welcome them for that. So I'd love to talk a little bit about the goals that you had with your program. Indira, you kind of mentioned that, hey, no matter what objective you have with the program, we'll work with you on that. There are a number of different goals that our clients think about before launching. Some of it is member acquisition, some of it is member engagement, growing a loan portfolio. I'd love to hear what goals and assumptions you might have had when you first launched the product. And then also, have you made any adjustments as the program has continued on? Indira, we can kind of start with you since you've been using the product the longest.
Okay, so when we first started out, I will be very blunt and honest and say that it was to have the product available for our members, right? Another tool in the toolkit. And that was a good thing to have, right? What will performance look like? What does the process actually turn out to be? So let me back up a little. So yes, we wanted to have the product, but now we have had almost 2 years of benchmarking it, right? And what the result is telling us is that you have people in, like Bryce showed us previously, in every category that's participating in this space. And that's the beauty of the product, right? It might help people plan better, but you might have people on a lower income scale that don't have that discretionary income that say somebody in a prime or super prime area might be able to afford. And that's the beauty, is that it's giving everybody an opportunity to participate in something and they can benefit from it, right? And that's what you want for your members. You want to give them something that they can utilize however they want to, whether it's, oh, I just need an extra $200 in my checking account this month, or I have my kids going off to school. I need to have another $1,000 available. Whatever that purpose is, it's affording the members to do that. So if we can make our members' lives better by offering this product, which is what we've done, it's a win for us and they become more sticky. Not only that, but we talk about ROI and all of those things, and that's good, right? It's about having a very solid product that our members are participating. Yes, do we want more people to? Absolutely. And as we expand the program, we're going to do that. Look for ways to do that strategically, not just to, haphazardly say, okay, we need more people, so we'll loosen up the criterias. But no, it's worked really, really well. And strategically, we will continue with this product for the foreseen future.
Yeah, that's awesome. That's great to hear. Ashley, what about educators? What were some of the strategies or goals that you had going into launching this product? And then have you made any changes since you launched?
Yeah, so again, similar to what Indira said, is more being relevant, being that one-stop shop. So we just wanted to make it available to our members. What we did is we did somewhat of a soft launch, and those members I mentioned before who were already using traditional products, we launched it to those folks. And because they were already used to using the products, they would more than likely be willing to give it a try and
Fence.
yeah, exactly. So we started there and it was really well received, and then ended up going out through our full membership. We do market through online banners, interstitial messaging primarily. We do use the Equipify powered emails as well. We have made a couple of changes to criteria along the road, just as you look through different plans and things of that nature. But Equipify has been very quick to turn around with any of those requests. So it's really great if I want something changed right away. It's pretty much done immediately. And now it's really grown to the point where we have nearly 2 million loans outstanding today, over 10,000 plans open and active. So our members like it.
Love that. Love that. Imelda, we talked about this in the last webinar as well. Just, you wanting to be, you thought you wanted to be point of sale and then more and more members were using it. Help us understand kind of how you started with the program, and what you've been seeing as you've progressed through your last almost 6 months now.
Yeah, 6 months. So still haven't been able to dive too much into the data, but our original strategy very recently is, as a credit union, we want to serve all types of credit borrowers in our community. And I think this is a non-traditional way to do that. And I think as lenders, we need to start thinking more non-traditionally. And your normal personal loan isn't very easy to get nowadays, especially with the economy and members struggling and pinching pennies. So I think this is a really amazing way for them to get into this space and be able to borrow with their local credit union, a trustworthy credit union that's in their area, versus having to go online to all these different online banks that could potentially give them a higher interest rate. So it's just it was an opportunity for us to lend deeper. And what we mean by that is lend across the entire credit spectrum without having to utilize credit. So our members can, with 3 clicks, get a quick personal short-term loan that they can pay, over time. And we knew that they needed that. This also helps them not use overdraft privilege as much as they need to, or get them out of that cycle. So there was so many opportunities for us to really get out to the communities that we serve and lend differently. And so as a credit union, we love this product. It was super easy to implement. I mean, I think we implemented within 90 days with very little hiccups. And out the gate, without marketing, the first day we turned it on, our members found it. They just found it. We didn't even have to market the first week. I think we had like 1,000 plans, and we're like, whoa, what happened? And then as soon as we marketed the BNPL offer, utilizing the marketing from Equipify that we loved, I think we saw it, just spike up overnight, like another 500 plans. So as of March, when we launched, we've done 11,800 plans for about $3 million. So our members love it. They're paying off early. So they're not even going full term, which what we're seeing, because they want to just keep doing it over and over again. So I think that was our original strategy, is for Arizona Financial. We just want to lend deeper in the community and provide our members solutions that aren't as intimidating. Getting your normal personal loan or credit card can be intimidating, especially if you've had challenged credit, or you're recuperating, or your income, to, like Indira mentioned, it can be an issue, and they're stretched thin. So this is a solution where they can get started with a local credit union that they trust and they have all their other services with, and to continue to expand those services with us. So far it's been great. Equipify has been a great partner. I would agree with Indira. We do not see Equipify as a vendor. It's a partnership. They've been there with us all the way through. And now we're just excited to kind of just start benchmarking the product and seeing how successful it is out the gate. It's been great, but we're excited. Yeah.
We're super excited too. We can't wait to see all the data and start a case study. That's something we're super pumped about. So one thing I'd love to think about, we have a ton of lenders on the call today. So I want to start thinking about, if there is a lender out there that's thinking about rolling out buy now, pay later, how should they be looking at it as a lending product? Because it looks a lot different than a personal loan, like you mentioned, Imelda. This is a small dollar loan with high volume. So these loans are turning over very quickly. What should the lenders in the audience be thinking about, maybe a little bit differently than they would any other unsecured product?
So one thing I would say is there's a lot of things in the news about buy now, pay later, and how consumers are using it. I would say do the research, really dig into your member data and try to understand how is your membership using those services today, because we have to remain relevant. If they're utilizing it elsewhere, offer it, because they're going somewhere else. It's better to have your member come to you for these services and continue to expand that relationship. And a lot of this is relevancy, in remaining competitive, but also being able to offer your members that other solution that's less intimidating. And I would also say that the delinquency is not as high as you may think. I know that some may be a little bit hesitant, because these are short term. These could lead to different types of borrowers asking for this type of service. But we've only been live for a short time, but we still are on track with what we're seeing with repayment. And we have to understand that some of these consumers, it's a broad spectrum. So you have your prime borrowers asking for buy now, pay later solutions, and also your credit builders, and also your potentially subprime. But they're all paying. They're all paying because this is a solution they want to continue to use over and over again. So there's loyalty there. So I would just say do your research, and really, the implementation is simple. We had very little issues. It's a great partnership to have, but ultimately, I would say do the research, understand what type of membership you have in front of you, and if they're using the solution, I would definitely consider offering this as a service.
Awesome. Yeah. And Ashley, how would you compare this? You're a chief lending officer, you live in lending every single day. How would you compare this product to other unsecured products? And how should the folks in our audience be thinking about that?
Yeah, it's actually performed better than other unsecured products that we offer with regards to delinquency. What's nice about it is it is a smaller dollar loan. So even if you do get one payment and for some reason don't get any more, it's not such a huge hit to your portfolio, but you're able to give those members a chance. And so we, just like many others, do, relationship-based lending. We really take that into account. And this gives some people an opportunity to kind of get their feet wet, establish some positive payment history, establish a lending relationship with us, where then hopefully we can continue on that journey.
Awesome. Yeah, and all of you have touched on something super important here, which is, having a product that's streamlined, easy to implement. You don't need to put a bunch of resources towards managing it. How much time did your credit union take or are you taking to manage this program today?
So I'd like to go first on this one.
Sure.
And
Go for it.
here's the why. I'm an old traditional lender, right? You buy box, you loan to value, your debt to income, your credit file, you verify your income and all of that stuff, right? So that's traditional underwriting. So, and I've been doing this a long time. So think about here comes along this fintech and it's telling me I'm going to base some data points on Indira Khan based on her relationship with the credit union. And I'm going to say she qualifies for $2,000. So I'm like, okay, the trepidation of looking at that and getting comfortable with it, I would think it's the first step, right? When you're looking at it from a traditional point of view, it's a little bit of a hurdle to get over. So when you start out, you're like, okay, let the first couple of loans come in, let the first couple of loans come in, and you're looking at them, you're dissecting them, and then you're starting to do like 1 month, 2 months, 3 months, and how is it performing? How is it performing? Am I missing anything? And a little by little, you start to breathe because now you're like, oh, it's working. It's actually working. And the other piece of it is that you have to get comfortable with the automation of it, right? The system doing what it's intended to do and trusting it. So it did. The other thing that was beautiful is that it is practically not touched by a human being. This whole transaction from start to finish, once the member clicks accept, it automatically books into the system. It automatically credits the accounts. It automatically archives the loan document. And the only time you'll get human intervention is when you might have a loan that they have to collect on. So, and it's treated just like any, collectible loan. But the beauty of it is that probably 99% of these are not touched by any human being, except for when it comes to the collection piece. So that to me is where your ROI is going to make the most sense because you don't need a full-time employee to manage this at all. You do need somebody to manage the program to look and see, well, what can we do better? How can we improve it? Are we too tight here? Are we too tight there? But overall, it's a self-managed product, and from a collections point of view, that's the only touch point you might have if something ends up in collection. So, and then I wanted to talk about one other thing because I don't know how much time we have, and that's the marketing piece with Equipify has been really, they're a partner, like I said, and anytime we need something, they're always engaging with us on the marketing front. So a lot of the collaterals and things that you will need, I promise you, they have a store that you can just say, I want this, I want this, I want this. Oh, let's push this out, let's push that out. And they're able to turn that around very, very quickly. So again, partnering with you guys have made all the difference in the world.
Ah, thank you so much, Indira. And yeah, we are at the end of our session. So gosh, ladies, really appreciate all of the context and sharing your experience and not only offering BNPL to your members, but also working with Equipify. We so appreciate it. So with that, we're going to wrap up our lending session today. So you can all wave to the audience and if anybody wants to reach out to them, hit them up on LinkedIn or reach out to me directly, and I'd be happy to connect you